everyone, my name is Mun and I'm the Managing Director of C-Block Capital. C-Block Capital is a private investment group based out of Hong Kong, and we operate across three key pillars. First is asset management, secondly is advisory services, and thirdly is media services. And we have been keenly looking into the security tokens space, looking for opportunities both to invest in, as well as to also help companies to make tokenization a reality.
Hi, I'm Rob Nance, founder, managing partner of STO Capital, no relation to C-Block Capital. We are a tokenized venture fund. So started about 2 years ago, August will be 2 years, and built a fund on top of blockchain. This is before the word security token even existed. And we invest in the infrastructure that's being built to support this ecosystem. So we're investors in companies like Coinbase, Bakkt, Tagomi, that are building all this.
Hi, I'm Deepak Mehra. I run the strategic investments function for Citigroup out of Asia. This is a successful model for us where we look to take minority equity stakes in market infrastructure plays, including fintech companies. We have a bunch of investments in the underlying technology, the ELT space. However, the security tokens is something which we are extremely evaluating very closely at this point in time.
Okay, thank you. Maybe just quickly my perspective of how I'm involved in security tokens or within our disruptive technology team within State Street. We have a number of projects. We're working with clients. We're looking to explore tokenization, wherever this goes, both from the perspective of how you actually solve the technology aspects, but more fundamentally, I think, is how do you drive distribution? And maybe that would be my first question to the panel. What do you really think is the benefit? What's the problem we're solving when we're talking about security tokens, and where you think it's going to have an impact to the market when investors are coming in? Maybe if you want to make a start.
When it comes to benefits, we need to first define benefits to who. Well, I see it as two different pools of people. First would be the investors, and then secondly would be benefits to the issuers. So let's first look at the investors. What are the benefits of doing an STO or investing in STOs for an investor? And the first benefit I can think of would be access. Think about it, if for me, just a lay person, wanting to invest in a piece of Picasso, wow, it sounds quite far-fetched, like maybe I have to work a lot harder for more years before I can actually afford it. But with tokenization, that whole idea actually becomes possible. It's possible for a normal person to invest in assets that were previously not accessible to them. And when you look at the, on the issuer side, well, the benefits to them would be, I would say, improved efficiency, because you reduce the number of intermediaries. Settlement time becomes a lot quicker, and if you take a longer term view, cost can be reduced for the issuer. So those are some of the benefits that I can think of.
Yeah, I'll dig in, take kind of one step further on the issuer side and what the benefits are from an institutional perspective. So I think, as a lot of people in this room know, if you're trading even a publicly traded security, you don't really know who owns your stock except through quarterly reporting. And so what this is allowing for the first time is real-time cap table management. So you can imagine, as an issuer of even a public security, using blockchain infrastructure, whether that's a private permission blockchain or a public blockchain, to know in real time who owns your security, who's buying it, who's selling it. And this is seen really favorably in the States from the SEC, because all of a sudden you can print an immutable record of who owns your security when. So I think that's going to be a really big benefit. I think that actually the enforcement agencies of securities are actually going to drive the adoption and mandate this, because it allows them to become a proactive regulatory agency instead of reactive. So instead of coming out and saying, you insider traded, you're going to jail, or you're facing fines, they can stop the trade happening before it even starts, because they can restrict who owns it, who can trade it, and build that right into the smart contract itself. So I think those are two really big benefits, one for issuers and then one for regulators.
Yeah, I agree with what both of them have said so far. I think from our perspective, what we're seeing, access is a big problem that gets solved because of security tokens. Just the fractionalization use case in itself, right, opens up an opportunity for even accredited investors who might not be interested in taking a big bite into an asset, even an existing asset at this point of time. Fractionalization actually solves that problem. It actually improves the liquidity quite tremendously. From a regulatory perspective, definitely, as Roberts mentioned, I think there's potential over there for the regulators to have a much more holistic and real-time view into stuff that's happening, and essentially that leads to de-risking of the system. And even from the perspective of institutional investors, I think the settlement risk can potentially go down quite drastically. That's one of the things that we are the most excited about in terms of shortened settlement cycles and everything that entails. That's much faster settlement finality, which can be enabled by this. That's another thing that excites us.
Oh, thank you. Rob, you mentioned something which intrigues me quite a bit, because if investors come to us and say, oh, can you help us with tokenization? So where do you start? Do you start building on a permission or permissionless platform? Do you see, in order to make tokenization work, the market to go in a certain direction, or do you think it's feasible that tokenization can really, for securities, live in this unregulated, permissionless network that some people are thinking about?
So when I think of the ecosystem today and who's building, so when I talk to institutions, they very much today want to build on a private permission blockchain. So the two that I hear the most would be Hyperledger and Corda. And the reason they say is, they say, listen, I would build on Ethereum if you can guarantee me there's no nodes operating in Iran and North Korea. And the truth is you can't guarantee that. And I think eventually everyone will issue on a public blockchain, but it's going to take time. And the analogy I use is what happened in cloud computing. So everyone used to have, computers used to be on-prem. They did everything on-prem because it was the most secure. Because cloud computing had some issues. And then I think around 95, SSL was created and solved a lot of the issues that happened. And we've seen a slow migration toward cloud computing. That said, today, about 70% of organizations have one application in the cloud. So we haven't even gotten there yet. So I think it's a long cycle. I don't think this happens in 5 or 10 years, maybe 15, 20 years. But I think today, we're really going to see projects like Hyperledger and Corda be where the majority of assets are issued. If you look at a big financial institution, let's just take Citi as an example. Let's say they want to issue MBS or CDO. Well, they're not going to do that on Ethereum. They're going to do it on Hyperledger or Corda or similar.
Would you agree with that?
I would, in terms of the timelines that you mentioned, I definitely don't see the public blockchain, the public network being something that takes off at least for the next 5 to 10 years. There are far too many unknown variables. I think the reality is we live in such a tightly regulated environment. For us, it's extremely vital to ensure that the whole ecosystem that surrounds us, from AML, KYC regulatory perspective, is satisfied. And I just don't see that level of comfort coming with the public network anytime soon.
From your perspective, would you share this being part of the challenges to drive adoption, or what do you think needs to be in place to get institutional investors to, on the one hand side, I would say, be ready for the investment, but also for the market and funds to produce the assets that institutional investors want to invest in?
I think the first hurdle that we need to overcome would be on the regulatory side. We're certainly expecting and looking for more regulatory certainty so that it gives more comfort, both to investors, especially the institutional investors. When it comes to cross-border regulatory compliance, there are so many unknowns. In one jurisdiction, the STO may be legal, but when you cross over to another jurisdiction, it may not be legal. And I was in Korea recently and talking to key players in the industry, and I asked them, is it actually legal to launch an STO in Korea? And the person told me, well, they didn't say it's illegal. So it's this gray area. But when you look at the traditional securities, it's very, very clear. We have years of history behind it with very clearly established rules. But even though STOs, at the basic level, there are still fundamentals that are similar to traditional securities, but the fact that you add a layer on top of it, tokenization, and there are still so many unknowns which opens up loopholes that still needs to be addressed. So the issue is, can you just take a traditional set of securities laws and implement it onto STOs and say that it can be fully all-encompassing? I'm not too sure. So until all those loopholes can be ironed out and there are more clearer guidance when it comes to regulations, it would give more comfort to the institutional investors. But I think the main obstacle that main hurdle that we need to overcome would be in the area of liquidity. And personally, that's one of the things that's stopping us from actually starting to invest in STOs. We're still maintaining oh, let's wait a bit more and see attitude. The worry is that, okay, if after I invest in this STO, will I be able to easily trade it? Is there sufficient liquidity for active trading? But in order for that to happen, there needs to be more education in the market for investors to understand more about this new asset class and what it is. Unfortunately, from speaking to some bankers and institutional players, some of them have not even heard of STOs, and some even asked me, oh, you mean ICOs, right? And I was like, no, it's a totally different thing. Even the rights to the token are completely different. So it just tells me that there is still significant lack of understanding among institutional players. So until we solve that hurdle and give further comfort to these investors, we're not going to see mass adoption of STOs.
Just add one thing to that. I think just the perspective from somebody in the States, the major financial institutions understand this. They understand that it's really valuable, and they're kind of all waiting for somebody to go first. And I think I would predict that by the end of the year, a major financial institution, a top 5 worldwide bank, will have completed transactions on a private permission blockchain. And I think we'll start to see that's where the market will move, and that's the largest opportunity segment from an investment standpoint in this market. Will be what technology layer helps that happen, and then where are these securities trading in the secondary market? I don't think you look at liquidity as a magic answer, like this is a currency. So I have a venture fund, and I tell people, if you want to invest in my venture fund, don't invest and expect to have liquidity on day one, because you shouldn't, right? This is something that if the fund goes 2-3x in a couple of years and you want to take some money off the table, maybe that's an option, and maybe there's liquidity. But there is no silver bullet out there. There is no, you're not going to see what you saw in ICOs. And we know how privately traded securities trade today, and obviously it's, the private equity market in the US has created kind of a robust secondary market, and I think that's what it will look like kind of in the tokenized security world.
Yeah, Tibak, I'd love for you to respond, and maybe on all of those issues around liquidity, you're a former trader, or still trader, how you think of how trading could be impacted by security tokens, and also maybe if you have a view on, is it time now where we would see some more established institutional banks and financial service providers to start offering services in that space? So maybe you have a view on all of these 3 elements.
Yeah, sure. So I think first from a liquidity standpoint, the fact is liquidity begets liquidity. this is such a fast-moving, evolving space that there's almost a first-mover disadvantage. So, as I echo the sentiments from my fellow panelists saying that you probably want to try and wait a bit and see somebody else make the first move so you can learn from the mistakes. And there's surely going to be some missteps, at least, if not mistakes outright. And in terms of the other thing that's top of my mind, I'm sorry, I just want to bring it up, is one of the things that concerns us about this space is something that we're watching very closely, is do we suffer from a problem of adverse selection? So one of the things that a lot of my peers from other banks as well, we feel that for some of the existing asset classes, you have very well established mechanisms for accessing liquidity, and yet we are talking about STOs. So is there a possibility that some of the initial STOs suffer from a problem of adverse selection, just that you don't really get the first look at the best ones? So that's again another reason why I think some of the participants initially at least might be a little reticent.
Maybe one question, because we are in Asia, and I like your example on Korea. Do you think certain jurisdictions are faster moving, slower moving? Maybe we can try to contrast, compare a little bit US versus Asia.
Yeah, sure. From Asia perspective, for sure, we're seeing some element of regulatory arbitrage emerging. For example, the Singapore Monetary Authority is definitely viewed as one of the most progressive regulators in the region. They are proactively soliciting fintech companies who can come and start some of the tokenization offerings, so that providing them with not only much more regulatory clarity, so that you have a sandbox environment, which actually has at this point of time one STO related company expected to graduate towards the end of the year, versus some of the others who are still just so the RBI in India, for example, is just in the process of setting up its sandbox. So there's 12 to 15 major markets over here, and you see things happening across the spectrum.
I would say in Asia, Singapore and Thailand would be the more progressive ones, and like Deepak rightly said, Singapore is very, very progressive. The government especially is very supportive of new technology, and have been attracting a lot of blockchain companies to set up shop in Singapore. And Thailand as well recently released some regulation around security tokens, which favors very well for STOs. But if you look at the Greater Bay Area, China, very, very clear stance. STOs is a no-no. It's banned in China. So everyone looks to Hong Kong then. It's the closest gateway into China. But because Hong Kong is also subject to China, but I need to say this very, very carefully, they will certainly not be the first to try to launch some new regulation. They are also, Hong Kong is also still adopting a wait-and-see approach. So they're looking to Singapore, let's see what the neighbors are doing. But I predict they definitely won't be the one to claim that, oh, we're the first to release new rules around this. But there is one bright spot though. In November last year, the Hong Kong regulators announced a sandbox. So this is one positive move in the right direction. So yeah, hopefully we'll see more clarity around the regional regulators, and for more widespread adoption moving forward.
So I think I kind of have a unique insight in what people wouldn't expect. I think that Japan will actually be one of the first in this region to do something. I know that SBI has been pushing really, really hard in Japan to work kind of on the security token front. I know they want to do their own security token, and I know that the government is interested in it. So I'm meeting Thursday with some members of Japanese Parliament who I know are intrigued by this and trying to figure out how it fits into their ecosystem. And typically it's not a country that moves very fast from a regulatory perspective, so it wouldn't be expected. But I actually think that they're going to end up doing more quickly than people would expect.
Thank you. So we're going to open questions to the audience in a couple of minutes. I'll encourage you to start thinking what you have. But